Let's start off with a segment that we don't talk about a ton in our industry flowchart, the base materials section.
This is important because we feel like it's not just our responsibility to talk about all the great stuff happening in the semiconductor industry and investing universe in the semiconductor world, but also maybe the crazy stuff happening that you also want to avoid. Hopefully, you all appreciate that hallmark of our work over the years because we've called out some real zingers. Let's do it again.
Okay, let's talk about this chart.
As you know, we are moving into, I guess we're going to call it the next phase of data center build out. We all, as investors, benefit from compartmentalizing things into periods of time, layers, segments. So anyways, AI inference has really upped the growth rate for companies in memory and photonics networking. We talked about both of those, I think, pretty extensively now at this point. So accelerated computing growth is re-accelerating in that market. And as a result, there's some funny stuff starting to happen in the memory market. Of course, we've talked about that extensively, but also in photonics, optical-based networking. So this is not copper, but optical, which is much more complex.
Now, I think there's always talk of a bottleneck or a choke point. These words are getting used with base materials as well, because we've had a lot of discussion about substrates, helium, you name it, the raw materials that go into semiconductor wafers. And that's why we're talking about that right now, because the market's really good at digging down and finding these companies that could be felt like to be the next big thing.
Yeah, and that's completely fair. The market is made up of diverse participants, and some of those participants are just looking for a trade, and that's fine. But whether you're a trader or long-term, there does come a point, and I think there's a point of intersection between those two groups, traders and long-term investors, where you definitely want to pass, and it no longer makes sense to chase the trade anymore. Okay, so we're talking about base materials and gas suppliers, but specifically within that, we're talking about silicon ingots, or maybe more broadly, not just silicon, semiconductor ingots and wafer suppliers. There's a bunch of companies that fall into that. This is the very front end of the semiconductor manufacturing process. Before a company like TSMC or GlobalFoundries or United Micro gets hold of the wafers, there's a whole different batch of companies that supply the raw wafers. It's also a very complex process. It's a very sensitive process. And here's a high-level view of who's who. The big ones, ShinEtsu, they're at the bottom. Company in Japan is the leader. Siltronic, Sumco, GlobalWafers, Soitec are the other publicly traded ones. SK Siltron is actually a segment of SK Group. You can't purchase SK Siltron specifically by itself, but it's a top player as well. And then there's a bunch of specialty companies that provide different types of raw material, raw wafers as well. Two of them we have on the right here, Sumitomo Electric and AXT. Sumitomo in Japan and AXT, a US company traded on the NASDAQ with operations all over the place. We're going to get into them here and more in just a minute. But basically, I guess what's happened here as demand has steadily increased now, just starting year 4 of this bull market, because of the CapEx cycle for AI data center and different shortages and different products being talked about, all of these companies basically have run up as of late. But especially some of the specialty companies that provide specialty wafers like indium phosphide or INP, gallium arsenide. Let's talk about those, because those are the specialty materials that you will see pop up when talking about silicon photonics and optical communications chips, not copper, but some of those higher performance, more expensive products to connect longer ranges within the data center. Let's talk about one of them in particular. We thought it was worth talking about because the last time we discussed this was actually 2 years ago when we talked about Disco Corp. So let's talk about this company, AXT. AXTI is the ticker symbol. This is a crazy chart.
It is. So this is the market cap for AXT. It was up over 4 billion just recently.
Yeah.
The market cap was up from hundreds of millions to over 4 billion just recently. And now it's back down to a measly 1.88 billion.
Just because the market doing a ceasefire for 2 weeks thing.
Up over 3 billion.
It's over 3 billion again.
And we'll talk a little bit more about the revenue and free cash flow for this company, but you can see just this chart alone can tell you what the optimism is for AXT.
A lot of optimism. So you look at a chart like this and you think, wow, this company must be growing like crazy, or at the very least expected to start growing like crazy. And to a certain extent, it is getting ready to. But on a backwards looking basis, it's most definitely not. In fact, it's well off of its all-time high revenues during the pandemic and chip shortage era. And let's break this revenue down. It was just shy of 23 million in the last quarter, and it was made up of indium phosphide, INP, of 8 million, gallium arsenide, 7 million, and then a raw material joint venture revenue. This is a business that they have in China, manufacturing in China for these specialty wafers, compound wafers, and high performance materials for chip makers, 7.6 million. And there's a few things happening here. First is they're having difficulty getting approval to export some of those specialty wafers from the China joint venture. I think you can read anything you want into that, and there's no way around it. This is a geopolitical thing, is ultimately what it is. So basically a third of AXT's revenue is being held up because of geopolitical reasons. Okay, that's fine. But we do know silicon photonics are a thing. Everybody wants to use light instead of just copper to move data around their data centers. It's more efficient. It can help with connecting longer distances across the data center as companies do scale out, not just the scale up within the rack. So INP in particular has been called out as a growth driver for AXT. And that is indeed the reason why the stock price has gone parabolic the last few months. Well, there's a few problems. Here's one of them.
Minimal free cash flow generated. You can see, generally speaking, it's been in the negative territory. There's been a few quarters where we've seen some free cash flow. Most recent quarter, just very small, minimal free cash flow. The indium phosphate backlog reached 60 million, but they're going to have to spend about 100 million to build a new greenfield fab to produce these wafers.
And that doesn't have to happen right away, but they have to plan for it, right? You don't just build a fab overnight. So they raised cash at the end of last year by issuing more stock, diluting shareholders. And this is a company that basically has this backlog, hasn't been turned into revenue yet, but to turn it into revenue, to realize some of the growth, they're going to have to spend a lot of money. And so this leaves them in a tricky spot. As an investor in a cyclical business, as we talk about all the time here, you always have to wonder, okay, am I going to get caught owning a company that has to spend a bunch of money in order to earn more revenue growth in the future? And do they start embarking on that journey of expanding capacity at exactly the wrong time, at the peak of the cycle, like what happened in 2021, 2022, at the end of the last chip shortage in the wake of the pandemic? This is also one of the risks facing the memory chip makers right now, albeit most of them are very large. That market has consolidated, and you have some very profitable companies that can self-fund that in Micron, SK Hynix, Samsung, SanDisk, and Kioxia. But you have to be left wondering about that, though, with a company like this that has already gone parabolic, has to spend money, doesn't have a track record of generating value for shareholders. So there's some craziness happening right now in this market. And I guess that's the point that we wanted to make here before we segue into some of the questions and the discussion that was had in the last week. Exercise some caution. There have been some others recently that have popped up as we've been doing some search. You can find it on the stock list that we attached to the article that was just published early this morning. A company in the UK called IQE that bills itself as the only pure play epitaxy wafer producer. That's just one, a UK-based penny stock that has risen quite a bit in the last month or two on hopes that maybe they get bought out or that they're going to sell some assets to reduce debt. So some funny stuff happening right here. I suspect we're going to see more comments, more questions about this. Probably people out there pumping their position. Maybe they have positions in these companies. You don't want to end up being their exit capital. Now, there is a chance they do continue to grow and these companies continue to do well, perhaps they can continue rising for longer than anyone expects, kind of like air test systems, which we took our profit out of too soon a few months ago.
As it turns out.
As it turns out, the growth cycle is here, but we felt like this needed to be called out. And to wrap up this segment, at least us personally, where are we more comfortable investing?
We have positions in Broadcom, Coherent, Lumentum. Those are two rather new additions to our portfolio. And in comparison to AXT, Sumitomo Electric is definitely the larger, more established play in indium phosphate. We personally would feel more comfortable with Sumitomo if we were going to take a nibble.
Yeah, and you get a lot of other stuff.
Right. It's a big company.
With Sumitomo Electric, they make a lot of cable assemblies and cable that would also be used in the data center as well. So you get some other interesting stuff. But some of these weird little pure plays, I think it is just kind of a normal process, part of a bull market, especially in the social media era, where you start to see this kind of stuff happen more frequently.